The following Show Me the Money is an encore performance. We'll be back with more live shows with Randy and Jake next week, but in the meantime, enjoy today's show.
For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn, people. Because you're tuned to the Ozarks' #1 show about your money. Randy Floyd, founder of Floyd Financial Group, will be your guide for straight talk about living the life you deserve in retirement. If you're interested in protecting and growing what you have and collecting a steady income stream for life, you've come to the right place. Prepare to be empowered. The phone lines are always open at 877-889-PLAN. That's 877-889-7526. Now, here's your Show Me the Money host, Randy Floyd.
Thank you so much, and welcome to Show Me the Money with Randy Floyd, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. My name is Jeff Shade, and of course, I'm just here to ask the questions, but the words of wisdom and solid advice come from Randy Floyd, founder and president of the Floyd Financial Group. How you doing this morning, Randy?
Well, I'm just happy to be alive and living in the wonderful Ozarks. How about you?
Oh, well, I'm happy to be alive as well, Randy, and good to be with you here on the radio and, of course, in this great part of the country that we live, the Ozarks. But let's talk about what's going on right now here. Some of the things I have read in the news, Randy, and it's an interesting article. You and I were talking about this just a few moments ago, that more than 40% of Americans say it's going to take a miracle for them to retire. What do you think about that article?
You know, I was looking at that, and the thing that I noticed about that is, and the first thing they said was, well, you know, COVID has taken a hefty toll on the U.S. retirement security. Well, number one, you know, yes, COVID was terrible, and yes, we hate what's happened there and what is happening there still, and the loss of life. And yes, the market did take a tumble back in March of 2020, but if you look at it year over year, I mean, right now to date, we're talking about 32% up from, where we were. Also, if you look at year to date, we're up about 18.98% in the S&P 500. So the thing that I would say is most people, and in fact, I would say almost every client that I have today that's in retirement or has retirement accounts with us, we've enjoyed that rally back, and the vast majority are north of where they were a year ago. So, I think that sometimes when we have these guys that go out and write these articles, while there is a shred of truth, there is, you got to get underneath the hood and look a little further. One of the guys said, what it is they're telling rational lies. Yeah. So that's what happens when you rationalize, right? So anyway, I just thought, I needed to tell people, say, look, all is not broken. In fact, the economy is booming and growing. I was watching some numbers last week about how much consumers are buying and spending. And in fact, we'll talk about supply chain here in a minute. And one of the things is people are buying a lot. They got deleveraged during the pandemic. They were at home all the time. They didn't go out and spend their money like they might have. And so they have paid off some debt. And now with all the stimulus money, they're flush with cash and they're going out and they're spending. So all is not lost. And, if you're not sure about your portfolio and where you're at, and if you're not making the money you need to give me a call here at 889-7233, and we can walk through a process to help you feel better about retirement in the future.
As we said here, Randy, this survey said 41% of Americans feel that it's going to take a miracle to retire. And I think that also plays to the fact that, a lot of people have different definitions of what retirement is. If you're looking to just sit and do nothing all day, yeah, maybe it's going to be difficult. But if retirement for you means that you're just going to be working less and doing some of the things that you like, maybe having a part-time job, I think that number is a lot less than that. And what's interesting is, what do you think the percentage of your clients is that think that they'll never be able to retire?
We don't have a very high percentage of that at all. In fact, when people come in and we sit down and we really look at where they are, and sometimes we're talking 10 years out, but most time we're talking 5 years and closer, we're finding that with putting the finishing touches on, maybe reallocating how their investments are set up to give them that protection we need during that last 5 years, that retirement red zone before they retire, that they're in good shape and we're coming out just fine. For people to maintain their lifestyle, be able to do some travel, and really enjoy retirement. And I would just say that's 90% of the time, that's what we find.
Yeah, and I think that that's very true, and it really plays to the fact that if you do have a comprehensive and a good plan like you do have for your clients there at Floyd Financial Group, that retirement, whatever your definition of that is an entire possibility. I was also looking at an article here that says executives warn customers to brace for continued shortages and price hikes into 2022. President of UPS says, I half-jokingly tell people, order your Christmas presents now. If you want them to be here by Christmas, you got to order them now, because if you wait until November, they may not get here until probably February or March. So that plays to the supply line shortages.
Well, also, let's say this, though. That guy kind of has an axe to grind, okay, here, so listen. So generally what happens to those guys, they can't hardly get it delivered because everybody waits till the last minute.
Right.
So with him planting this seed a little bit earlier and having a good reason, maybe he can help relieve some of the bottleneck and the pressure that they have. And kudos to him. That's okay. I mean, that's good business sense. And there was, on CNBC last week, there was a guy talking about, he runs the Port of Los Angeles, and they unload about 11,000 containers a day over there. And they were talking about they have ships anchored and that they're actually unloading and doing a lot more capacity than they've ever done. And so what it amounts to, again, it goes back to the fact that the economy is strong, people have money to spend, and he said, that they have plenty of workers now on the docks as well, and that those workers have really, really stepped up to the plate and have been working lots and lots of hours. So I think this is going to solve itself a little bit, and I think also we're going to see inflation get back into check. And so it's going to be really interesting to watch it unfold, but I'm just telling you, there's a silver lining in this cloud, I believe.
Do you think that we should count on inflation to continue at this high rate, 6-7% here for the foreseeable future?
I think for the short run on things that are in short supply, that people are going to continue to price gouge and, raise their price as much as they can. But I do think once we get supply chains back intact and this high demand slacks a little bit, that we will probably see inflation come back down into check, not meaning we're going to see prices return to where they once were, but we're going to be at this new level. I don't think it's going to continue to be inflated. Now, there's going to be certain areas that may, if they keep pressing the edge of the envelope here on, man, we got to be electric by 2035, and we got to get off fossil fuel, and we're going to tax people that burn fossil fuel after 2035, that may create some issues. But again, so utilities may see some real spike. Europe is already seeing this. We've seen that in California in some markets, they are charging more for electricity during peak usage hours to try to discourage people. So there's a lot of things that will probably still have some inflation just due to demand that we cannot meet for a while, due to some political agendas that maybe you and I wouldn't agree with. Yeah. We're probably going to see some of that. But I think by and large, we're going to see inflation slow down as we get supply chains full.
Well, Kroger, the nation's largest supermarket chain, indicated last Friday that it plans to raise prices because of this ongoing inflation. And I know that you and Lisa do a lot of online supermarket shopping. But when I go into my local food store, which is a Kroger affiliate, at least in my store, I'm seeing that, we buy bottled water, those 24 packs, 36 packs of bottled water. There isn't a bottle of water to be found in that store. Have you found the same thing when you're ordering things online, that there just isn't that product available?
Right. We find that there's some shortages out there. And let's say we order online. Let's say we order 25 items. We're going to have 2 or 3 items that will not be in stock for sure. And I'm talking common things like maybe container of whipped butter, or maybe something as simple as maybe some coffee or something like that. But, again, I think that a couple of things. I mean, demand is high, and, when demand is high, there's always shortages and outages. But I think we're going to see the other side of this, to where we're going to have plenty of supply. It's the old pendulum swing, in the clock, right? We've been way out there in left field. We're going to come back because one of these days we're going to have more supply than we need. We might see a little bit of deflation in some areas that way, and a lot of things on sale. And then finally, we'll kind of go back to the center a little bit, and it'll all be okay.
I think you're right about that, Randy. It's going to be okay. Right now, there's still plenty of toilet paper and paper towels. I know we had a run on those early, but there seems to be plenty of those on the shelf. I just can't figure out why there's, not enough bottled water out there, and why the price of some things is just way, way higher. Of course, gasoline prices are way up too, and we know that most of those things that the supermarkets get come by truck, so they are going to pass those prices on to us, the consumer. Let's talk about taxes a little bit. And I read something interesting that piqued my interest. I know will pique yours as well. I heard that there was going to be a $1,500 tax credit for the purchase of an e-bike. Have you heard anything about that?
Well, that's pretty exciting. I was about to buy another one anyway, so that just makes it all the more. You say a $1,500 tax credit, did you say?
That is what I heard from another financial
Wow.
advisor. I cannot verify that at this point.
So, a tax credit, Jeff, is not like a tax deduction. That's
Right.
like getting a check for $1,500. So, yeah, that will create some excitement. The only problem is right now, because of the supply chain shortage, you can't hardly find an e-bike out there.
Yeah.
So that's exciting.
Well, because I've been looking at e-bikes since I heard that. I get ads for them all the time. But who knows, Randy, if I order an e-bike today, I mean, I'd get it for another year or so.
And that's true, Jeff, because honestly, I've been looking to buy an e-bike, another one, for the last 6 months. And every time I go out and try to order one, they say, well, we will project an availability date. And then they do that. And then guess what they do? They move the availability date.
It just keeps moving. It's a moving target. We're talking with Randy Floyd here at Floyd Financial Group about current events. And once again, you can get a complimentary financial plan with Randy at 417-889-7233. One final thing in this segment, Randy, I want to talk about the onslaught of online scams. Can you tell me more about how those are taking over the internet?
Yeah, for sure. With everybody being at home and everybody being engaged on the internet more and more, and everybody buying and selling online more and more, from Facebook Marketplace to Craigslist to eBay, we've just found that the number of scammers is way up. There are people that are working together in cahoots. People are out looking for opportunity. They latch onto those people. They've got somebody else at another website, at another company or something they represent. Then they kind of connect those people, and they'll put you in the middle, and you get to make all this profit. And I'm just going to tell you, what ends up happening is they end up sending money to the first party, and then they can't find them anymore.
That's exactly right. I still have a few letters here. I am a multi-billionaire, actually, with people, princes from other countries who want to put money in my bank account so they can collect their inheritance. So do not fall for those sort of things. Another scam, Randy, if our listeners go on Facebook, you'll see those little poll things come up sometimes that say things like, what was your first car? Like, what's
Right.
your favorite color? That sort of thing. They'll ask those sort of questions, and people answer those questions. And who's behind those but people who are looking to steal your identity, because many times those are personal identifying questions. So if you see those things, do not answer those, or if you feel you've got to answer, put down some sort of a wild answer. My first car, a Rolls Royce or something like that, because it's just not true. You're listening to Randy Floyd, Floyd Financial Group. Our show's called Show Me the Money. Once again, if you'd like a complimentary, no cost, no obligation plan with Randy and the folks here at Floyd Financial Group, call this number, 417-889-7233, 417-889-7233. You can also request it online at the website, which is floydfinancialgroup.com. Time for a break, Randy. We'll be right back with more of Show Me the Money right after this.
Nowadays, 401ks are a part of life. Chances are you or your spouse have a current one, or even an old one that's tied to some long-forgotten job. But how familiar are you with your 401k? Do you know your options, your fees? Are you maxing out the benefits? Most importantly, do you know that you may be able to roll over your 401k without leaving your job? Hi, I'm Randy Floyd, founder of Floyd Financial Group, where we've been working with retirees and pre-retirees in the Springfield area for over 15 years. In that time, we've learned a lot about the different 401k offerings from local companies that you know or maybe even work for. If you want to know more about what's inside your 401k, pick up the phone and call 877-889-PLAN for a complimentary review. We'll get the answers, we'll see if you can take more control of your 401k, and we'll make sure you're not leaving any money on the table. So call us today, 877-889-PLAN. That's 877-889-7526, or visit us online at floydfinancialgroup.com.
The retirement professionals at Floyd Financial Group don't understand why so many retirees have to go to a bunch of different places just to get their financial affairs in order when they're all so interconnected. With access to more information than ever before, it's important to work with an advisor who helps secure and grow your wealth while helping you be better prepared to make decisions that help you reach your goals for retirement. They are fiduciaries who actively manage your money with their sole focus on you and your personal situation. So call Floyd Financial Group today at 877-889-PLAN to schedule your complimentary retirement review. In today's world, it doesn't make sense to work with a financial professional who can't offer you a full breadth of services. You've worked hard to save, and now you deserve more value from your advisor. At Floyd Financial Group, they start by putting their focus on you and your goals for retirement. Then, they work with you to help build and maintain an integrated strategy for your future. Schedule your complimentary review today by calling 877-889-PLAN. That's 877-889-7526. Or go online to floydfinancialgroup.com. Ready for a heapin' helping of some more real talk? Thought so. Here's another serving of Show Me the Money with your server, Randy Floyd.
Welcome back, everybody. This is Randy Floyd. You're listening to Show Me the Money. And in this segment, we're going to be talking about the future of Social Security. Where are we headed?
Yeah, I hope we're headed in a good direction, Randy, but a recent article indicated that Social Security would theoretically run out of money a year earlier than expected. Previously, they had forecasted to run out of money 2035, now expected to be depleted by 2034. But do you really think that any politician is going to let that happen?
Well, I don't think so, especially, for people that are probably 50 and older. I'm going to tell you that you're probably safe. Now, if you're under 50, you need to be really thinking about what you're doing and how you're saving, and the fact that probably Social Security, it will probably still be there in some form, but it's going to be a much less payout. So to kind of get a grip on this, like you had said, the last few years they've been saying, well, it would be out by 2035. Now it's 2034. And part of that reason is because all the people that didn't work last year to fund Social Security because of COVID-19 is one of the things that they're kind of laying that onto at this point in time. What I will tell you, though, simply is this. We have about 65 million Americans that collect Social Security. That's a few bodies, right? And we pay out about $93 billion a month, is what we pay out on Social Security. So when you look at that and the fact that we have right now only $2.9 trillion in the Social Security Trust Fund, and it can only invest in government treasuries earning about 2.4%, you can see how we're going to run out of money. Now, we're going to run out of money in the trust fund, but current taxes would still fund about 78% of the current benefits that are being paid out. So what I really think is going to happen, Jeff, is as we go forward here, they're just going to make the retirement age later and later, and they're also going to increase the cap on where people get to stop paying Social Security on their income. So I think doing a couple of those things is going to stretch it out. And like you said, it would be political suicide for any of these guys to come along and say, hey, we're going to cut your benefits, because, again, probably 40% of retirees' income comes from Social Security today.
So it looks like Social Security will be okay in the long run, as you said, 78%. I mean, do you think we really would, in our lifetimes, see a benefit cut by 78%, or do you think we'll still get 100% of Social Security, but the age of retirement will go up, and as you said, you're going to be paying taxes on more of your income? Basically, is there going to be a fix to this that we're going to be paying now so that we don't reduce benefits at all?
I don't foresee that benefits are not going to be reduced. I think that they're probably going to have to be. When you look at the effect of inflation, especially like this year, if we're paying out $90 billion a month, let's say, and let's say we have a 6% inflation on there, now we've increased our payout $5.4 billion a month. So when you start looking at how inflation is going to affect that, they're going to have to probably put a lid on this. Again, like I said, I think people 50 and older probably are out of danger, but I'm thinking if you're those 50 and younger, it's going to be a very different animal. We've also talked about the fact that looking forward for people under 50, they may even means-based test to see if you deserve any Social Security, right? Even though you funded it, you may not deserve it because you may be making too much money, Jeff.
And I know you've told Jake, your son, to not count on Social Security and to fund his retirement plan very, very well there. And I think that's very, very good advice for anyone to take. Right now, Social Security as a part of someone's monthly income, Randy, what is it on average for your clients? Is it like 30, 40, 50% of their cash flow in retirement?
It varies quite a bit, but I would say overall it's probably about 40%, maybe 50% in this area of people's total cash flow each month. Most people around here have done a pretty good job of saving, so that's what I would say that it is. But still, man, I mean, when you lose 40%, or if you lose 20% of your 40%, it's still negative 8%, right? So, I mean, it's one of those things that's very important. And again, I think what they will do is, they will raise the threshold. Like right now, if you earn up to $142,800, that's the portion that you pay Social Security tax on. After that, you don't pay any more Social Security tax. So I think they're going to continue to raise that. And I would not be surprised to see in the very near future full retirement age go to 68 or 69.
Yeah, right now it's between 66 and 67, depending upon what your birth date is. Randy, Social Security seems to be one of those things that we get a lot of questions about here on the radio show. People very interested in that. As you said, it is a significant chunk of someone's retirement income. And Frank in Nixa sent us a question, and I'm going to paraphrase it here. Frank basically says he's planning to take Social Security at age 68. However, his wife is age 62. Mrs. Frank is age 62. She's going to be taking Social Security early, so she's going to get a reduced benefit. And his question is, when he turns on his Social Security at age 68, will she get half of his Social Security as a spousal benefit?
Yeah, the answer to that question is no. She is going to be permanently reduced because she took Social Security early. She will not be able to step it up to the full benefit later. Probably what will end up happening based on 62 versus I'm going to assume that her full retirement age is 67. I believe the multiplier is 32.5% of his is what she's going to be able to get. So it's probably going to get her a little bit of a raise. But unfortunately, if you take it early, you will have to face that penalty.
So there are any number of ways that you can take Social Security, according to Dr. Larry Kotlikoff, professor of economics at Boston University. He's also written a lot of these books about Social Security. I talked to him last week. He says there are around 2,700 different Social Security rules. And with that in mind, Randy, you have a Social Security optimization program, do you, that you use for clients to make sure that they're getting all the money that they deserve?
Right, we do. And, we run lots of scenarios. And we have a software program that gives us the top 5 or the 5 best scenarios for each client. So one of the things that's interesting about that, though, that as we factor all this in and we talk to people about how to take Social Security and how to maximize their benefits, there's the money side of things and then there's the practical or the human side of things. Mm-hmm. So we always have to look at things like, how's my health today? I mean, am I going to be here 5 years from today? Am I going to be able to move around and do what I'm doing today 5 years from now if I'm going to wait from 62 to 67 to take Social Security? Also, what's the difference in the payment? Am I going to be able to live on the lower amount, or am I going to have to work part-time along with taking it early? And for some people, they like that because it gets them out of the house, it gets them on a schedule, and they're not sure that they can just go home and go cold turkey in retirement anyway. So lots of factors come in other than just what's the best dollars and cents amount per month, what makes sense for you as a human being and for your lifestyle and what you're really wanting to accomplish.
And the earliest you can take Social Security is age 62, and I think that's another very common question that we get here all the time is, should I take Social Security at age 62 when it is first available to me? What would be the most common answer to that question?
Well, the most common answer we would get is most people are saying, man, I'm taking it while the getting's good.
Right.
This is kind of what we hear. And, the other side of that coin is people say, well, how do I maximize? How do I know what the best choice is? Well, if you can tell me the exact day that you're going to draw your last breath and leave this planet, I can calculate that for you because I can reverse engineer it.
Right.
But until we know that, and nobody's really ready to write that in stone and say, okay, this is my day, right?
Right.
So unless you can tell me that, it's kind of hard to know. But again, it's more of a practical side and a human side, a financial side and a human side that we have to look at. And the answer is different for each person, and every family's dynamics, and what income they have from mom or dad, varies so much. It's hard to give a blanket answer, and that's why there's so many ways and so many, different thought processes on filing Social Security.
We're talking with Randy Floyd here at Floyd Financial Group about the future of Social Security, some of the so-called entitlement programs. Randy, I want to touch on Medicare Part A. I understand the trust fund there is expected to be depleted pretty soon too, right?
Well, they've been talking like 2026 is what they're talking about there. So, that's really pretty close. That's 5 years, Jeff,
Right.
until they're going to have to start to cut benefits and things. So I think there's a couple of things that probably need to be talked about here. While the cost of health care is very high, probably higher than it's ever been, we in this country have enjoyed over the years a very low cost attached to health care. So when you think about it as a percentage of what people, earn, what do they actually pay for health care out of their pocket? So let's say I end up, I have a Medicare supplement plan, and I know that I can go to the doctor. I don't have to pay any co-pays. I know that I can go to the hospital, and if I've got a supplement plan with my regular Medicare Part A and B, I probably don't have any hospital deductible. I may have a Part B as in boy deductible of a couple of $100, but everything else is pretty much going to be taken care of. And so a husband and wife in that situation are probably going to pay about $160 a month each for their supplement and their Part D drug card. So that's times 2, it'd be $320. Plus they're going to pay about $300 for their Part B that they pay out of their Social Security check. So if we got $320 and $300 is $620 a month. So you figure that is about, $7,400 a year. And if the average retiree makes around $70,000, we're paying about 10% of our total budget to cover one of the most vital things we have, which is what? Our health.
Yeah, exactly.
So some people spend 25% on their car.
That's crazy.
Yeah. So I'm not here to say that it's not broken and it doesn't need to be fixed. Yeah. Healthcare in this country is really in a crisis. Yeah. I would totally agree with that. But again, we have to keep things in perspective. I remember years ago, and I'm talking like probably 25 years ago now. Well, not 25, 20 for sure. I was talking to a gentleman. He had been working for a large company that I won't name, and he said, "You know what they did?" I said, "What?" He said, "We now have to pay $8 co-payment for our drugs." and before that they had paid nothing for their drugs.
Yeah.
And so I'm sitting there going, well, while that's not good, I mean, I'm not sure that that's the end of the earth. And again, I'm not saying that the healthcare system doesn't need addressing. It certainly does. But again, we're not completely broken.
We're talking with Randy Floyd here of Floyd Financial Group. One final thing, Randy, you talked about Medicare Part B right now, $148.50 per month is what that is. When will we find out if that's going to be going up and by how much?
Yeah, it'll be going up, I'm sure, for next year just because of cost of living and just the cost of everything with inflation. We should know that number. We usually get it in third quarter. I don't know exactly, or excuse me, not third quarter, fourth quarter, but I'm not exactly sure when it will be. But yeah, we will be seeing that number, and we'll have it, and we'll want to bring it up on the show to let people know what to expect. And we'll also be getting the COLA information here before too long. We're thinking that maybe as much as 5.5% or 6%.
Yeah, so COLA, cost of living adjustment. So last year, Part B Medicare, $144.50. This year, $148.50. Went up by $4, so figure probably, $152, $153. But we won't know the exact figure until a few more weeks from now. And as soon as we know it, you'll know it here in the radio program. Randy Floyd here at Floyd Financial Group offers a complimentary financial plan for our loyal listeners. If you want to get in and get yours, all you got to do is call 417-889-7233. 417-889-7233. You can also request it online at floydfinancialgroup.com. Time for a break here, Randy. We'll be right back with more of Show Me the Money after this.
Are you giving your Social Security dollars back to the government? It happens every day to people who don't have an effective Social Security strategy. The right plan for accessing your Social Security benefits can mean tens of thousands of dollars to you and your spouse's retirement income. Don't make the costly mistake of being unprepared in retirement. Call Floyd Financial Group now at 877-889-PLAN for a free Social Security optimization report. Take advantage of proven strategies to help maximize your Social Security benefits. You've paid into this system your entire career. Don't make the same mistakes that cost people tens of thousands of dollars of their hard-earned benefits. Call Floyd Financial Group right now at 877-889-PLAN and arm yourself with their Social Security Optimization Report. It's absolutely free, it's easy, and could dramatically change your retirement. Call Floyd Financial Group right now at 877-889-PLAN. That's 877-889-7526. Or go online to floydfinancialgroup.com. That's floydfinancialgroup.com.
Since the beginning of time, the needs of people haven't changed all that much. The need to protect what we currently have, the need to prepare for adversity for tomorrow, and the need to build a foundation for the ones we love when we're gone. At Floyd Financial Group, they're committed to these needs and are proud to say that they work toward assuring their clients that their savings will be protected, their nest eggs can grow regardless of the market, and in the end, count on a legacy for the ones they love. It's not too good to be true. Call Floyd Financial Group today at 877-889-PLAN and and they can show you how they've helped so many families count on the life and retirement they've dreamed of. That number again is 877-889-7526. They can't predict the future, but they can plan on protecting and growing your nest egg and offering you a lifelong retirement income that you can rely on. Call them now for your free review at 877-889-PLAN. That's 877-889-7526. Or visit them online at FloydFinancialGroup.com. That's FloydFinancialGroup.com. Back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your host, Randy Floyd.
Welcome back, everybody. This is Randy Floyd, and in this segment, we're going to be talking about the fact that we're probably experiencing historically low taxes right now.
Yeah, and Randy, I mean, a lot of people maybe not believing that fact, but the fact is, just the facts, ma'am, that these are historically low tax rates because we know, according to the president, that they're going to be going up. And it's interesting, I did read a poll that I think more and more people are believing that this is going to be a one-term president. So let's talk about that. What do you think about the one-term part, and what do you think about the taxes increasing and his promise of doing that?
Yeah, well, I certainly think here of late with the Afghanistan thing and actually many other things that have happened, I think you're right. We're probably pointing toward a one-term president here. I also think that there's been a couple of things that have been interesting. We really felt like that when the Biden-Harris administration got in, that they were going to go in there and really do some things that they haven't been able to get done yet. Now, certainly, they've done a lot of things I don't personally agree with. And the method that they have tried to, what they would call correct the income or the wealth gap in this country, I don't think their approach has worked very well. In fact, I think what it's done is it's probably made the gap even wider than it was before we started. And, of course, now they're wanting to do away with the Tax Cuts and Jobs Act that President Trump put into place, lowering corporate tax rates and giving people a little higher deduction off, just personal exemption deductions that are automatic, and really lowering people's tax burdens overall. They're wanting to reverse that now. Right now, the maximum tax bracket in the country is 37% for the Fed. He wants to take that to 39.6. He wants to change the capital gains tax rate to where we get favorable tax rates now for long-term capital gains. He wants to take long-term and make it just ordinary income. And, for a lot of folks, that would take that up to where now it's 15% if you don't have state tax. For a lot of folks, it might be now as much as 39.6. He wants to take corporate tax rates back up to 28. And really all this stuff, what it really does is just discourage people. And so I think that, while he's going to get a lot of this tax plan done, there's a lot of things to talk about here. Do I sell my extra farm now? Do I sell my extra house now? Do I sell my lake house? If I've got highly appreciated stocks and bonds, do I sell them now and take those capital gains, or do I wait till next year? I'm hopeful that he won't get any of this tax plan done until next year, because we've had a lot of people come through that have sold real estate, realized some capital gains, and we're hopeful that they are out of the woods. And the reason I say out of the woods is, the original plan was to get this passed this year, raise the capital gains, do away with the step-up in basis, do it this year, and then retro it back to April 28th of 2021 to catch all those people that tried to get ahead of it.
And this is all part of his Green Book plan here, which includes those tax-increasing measures, as you said, 37 to 39.6% top marginal income tax rate, and among other things, too. One thing that was of interest is the step-up in basis, and you had mentioned about people selling real estate. I heard, and I don't know if you've heard anything about this, but is the step-up in basis going to go through, or do you think that might be spared?
Well, we can certainly be hopeful that that would be the case. But there's also been talk that he wants to tax unrealized capital gains. So let me explain what that is. So let's say that, Jeff, you buy a stock for $1,000 worth of stock, and that appreciates to $2,000, and you didn't sell that, but you've made that $1,000. Generally, it's under today's law, to realize that $1,000 gain, you would sell that, and that's called a realization of that gain, and then you are subject to tax on that. Well, he's not wanting to let people be able to carry that forward. He's wanting to say, hey, you made it. Even though you haven't sold it, you got to cough up the tax. Well, and he's wanting to apply that to land.
Wow.
He did talk about maybe, giving us one additional little extra help, I guess, and that is passing family businesses. If you keep it in the family, they're talking about you might not have to pay any capital gains on that sort of thing. But anyway, it's just one of those things. This whole thing is just about trying to find money to prop up, and I'm going to just say it, people that really don't want to go work for a living.
Yeah, okay. Well, just say it like it is. That's what the program is all about. I mean, straight talk and honest answers. I'm with you on that one. So, if you have this unrealized capital gain, as you said, stock $1,000, now worth $2,000, but you haven't cashed it in, you owe taxes on that. We know the market is volatile. What if your $1,000 stock becomes worth $500? Do they give you money back? I don't know. How does it work?
Well, that's a really good question, isn't it?
Yeah.
So the other thing is, how do you police and monitor this?
Yeah.
Of course, you know what they're wanting to do now? They want to add a whole bunch more IRS agents to go out and track people down.
Oh my
well,
gosh.
that's really productive.
Yeah.
Why don't we simplify so we need less agents?
Well, yeah. Yeah, exactly. That's one of the reasons I moved from the Northeast. I remember living in New York City, and people would go to New Jersey, to the Garden State Plaza to shop for clothing because there was no tax on clothing in New Jersey. Well, the state of New York sent tax revenue agents over to New Jersey to police the parking lot looking for New York license plates so that they could ask, people to show them their bags and give them a tax bill on that. So, yeah, that is a little overbearing there. The bottom line is that, as we said in the beginning here, these are historically low tax rates that we're in right now. We probably will not see them get any lower than this. So how can we prepare for the inevitable, Randy? How can we prepare as individuals, investors, and just good old solid Americans for increased taxes?
Right. So, here's what I would say. For the average person across America, you're going to pay some more taxes, yes, but it's not going to be a major thing, I don't think. And when I say the average person, if you're making $100,000 and less a year in retirement, if that's what you have across Social Security, investments, and that sort of thing, I don't think taxes are going to get way out of hand. Yes, I think we'll pay more, but they're not going to get way out of hand as far as income tax goes. But I think if you're above those numbers, you probably need to be figuring out how to get your taxable income a little bit more under control. So a couple things, if you've got large traditional IRA accounts or large traditional or 401k accounts, in other words, non-Roth accounts where you get a tax break on the back end, you need to be looking at what your options are to maybe convert some of that money to a Roth. And you have to pay some taxes today, but it may pay big dividends later. Now, let me kind of quantify this a little bit. If you've got a couple of $1 million in an IRA and you're 60, probably not going to make sense for you to do a Roth conversion today and pay all that tax on the front end, because you're going to end up with probably less money because you have so much less money earning and working for you, right? Because you're going to pay 40% on that money as you take it out of there in many cases. Now, if you have time, if you're somebody that's 50 years old or maybe even 55, depending on how much money is in there, and we have 5, 6, 7, 8, 9, 10 years to take that money out and migrate it over to a Roth IRA, then it could make very good sense to do that. Because remember, what happens, of course, when you fund a traditional IRA, you get the tax benefit today. If you have a Roth account, after 5 years of it being in that Roth IRA, you get to draw all the money out along with the earnings tax-free. In fact, it doesn't even show up on your 1040. So that's the thing that I would say needs to be investigated by people first and foremost. The other thing is, you need to look at if you have highly appreciated real estate right now, and some people are saying, hey, should I sell this now? Is now a good time? Or should I wait and see what happens with the tax bill? So a couple things I would say. Number one, if Mr. Biden doesn't get this capital gains tax thing done this year, I believe that he will get it done next year. Remember, we got 3 more years of this current regime. I mean, not regime, this current presidency that's in there.
Regime.
Okay. Sorry.
Okay.
So anyway, we got another 3 years of this to go. So it's probably going to get done. We also have real estate at all-time highs right now.
Yeah.
And so you might get favorable tax treatment by selling. You might not, but he still may get it done this year and retro it back anyway. So that coupled with the fact that we think that real estate's about as high as it's going to get, and you might actually get less by waiting to sell over the next 12 to 18 months. So if it's a conversation you'd like to have about your assets that you have accumulated, and maybe you've got some highly appreciated stocks, bonds, again, maybe it's an extra farm, maybe it's an extra house or something like that, certainly give us a call. We'll sit down and we'll work through that with you, and we can do all the tax calculations right here in the office.
Yeah, we know that tax minimization, one of the most important parts of a financial plan. And if you would like a financial plan that does incorporate tax minimization and tax maximization strategies to make sure that you pay your fair share of taxes, but not 1 red cent more. And I hope that's politically correct, Randy, but nevertheless, not 1 red cent more. Call 417-889-7233, 417-889-7233 right here in Springfield. You can also request your plan online at FloydFinancialGroup.com. Time for a break, Randy. More of Show Me the Money comes your way right after this.
Retirement is supposed to be about freedom, not survival. After a lifetime of hard work, nobody ever dreamed of just making it through retirement. At Floyd Financial Group, we believe you can thrive in retirement. That's why our professionals help create strategies that integrate your lifestyle goals and your finances into one comprehensive plan. If you're ready for a different approach, call us today for your complimentary review at 877-889-PLAN. That's 877-889-7526.
If you hear the word insurance, what comes to mind? Is it a company, a funny advertisement, your car in the driveway, or the roof over your family's head? I'm guessing you didn't even think about taxes. But if you could retire today and pay little to no taxes on your retirement income for the rest of your life, would you? At Floyd Financial Group, we're here to tell you there's a whole other side to insurance that you're probably not even aware of. Many wealthy investors have been using some of these sophisticated insurance products to minimize their retirement income taxes. Not everyone can qualify for these premium insurance products, so call today at 417-889-7233 to learn if it's an option for you. At Floyd Financial Group, we put our clients' interests above our own, and as an independent firm, you'll have more access to a variety of products and strategies that can help reduce or even eliminate your tax burden in retirement. One phone call could change the course of your retirement future. That number is 417-889-7233, or go online to FloydFinancialGroup.com. Advisor services offered through Floyd Financial Group, LLC.
Do you currently have money invested in mutual funds? Are you aware of the potential hidden fees you could be paying? This is Randy Floyd here, founder of Floyd Financial Group. I recently had a client come into our office thinking they were paying 1% in fees to their mutual fund broker. Once we did a fee analysis on their portfolio, we uncovered that there were hidden transaction fees they had no idea they were paying because they didn't appear on their monthly statements. Instead of the 1% they thought they were paying, they were really paying close to 3%. And for them, that was $35,000 in fees. As an active traveler, that could have paid for several trips last year. Don't let this happen to you. After a lifetime of hard work, make sure that your nest egg is safe from hidden fees. Call Floyd Financial Group today for a complimentary consultation and fee analysis to uncover what hidden fees you may be paying. Call 877-889-PLAN, that's 877-889-7526, or visit us online at FloydFinancialGroup.com. Remember, it's time to take control of your money.
Ready to climb a mountain of financial know-how? Good. Because it's time for more Show Me the Money with your financial Sherpa, Randy Floyd.
Welcome back, everybody. This is Randy Floyd. You're listening to Show Me the Money. And Jeff, we always talk on here about, coming in to sit down with us and talk and work on some things. So we're going to talk about what that looks like in this next segment and the 5 steps that we go through here at Floyd Financial Group.
That's exactly right, Randy. You and I have done about 150 shows together, and for those loyal listeners who've been with us through those 150 shows, they know the drill about calling 417-889-7233 to get their complimentary, no-cost, no-obligation financial plan. But for those new listeners, let's talk about what happens when someone calls and does request that plan. They're going to set up an appointment with you. Ashley will take the information out there, and then they come in for their first appointment. So let's talk about that a little bit, Randy. What happens in that first appointment?
So once you talk to Ashley and she sets up your initial consultation, she will send you out a confirmation letter, and in that letter will be a suggestion of certain items you should bring along with you. Certainly, it's not a make or break if you cannot bring those things with you, but if you can, all we're trying to do is make our time together as productive as possible. So step 1, though, of our 5-step process is called discovery. And so Discovery, Jeff, is just basically we want to sit down and get to know people, find out what's important to them, learn a little bit about their family, what their needs might be. Once in a while, we have people with special needs where they have a child maybe that's disabled, or maybe something's already happened to maybe where we have a husband or wife maybe disabled or something like that. Or there's just all sorts of things that come up. But really what we're looking for here is what's important to them, how do they view retirement, and really just to kind of get down on a personal level so that they can feel good about talking to us, and we can learn about them. But also, we're going to let them learn about us, because we think it's very important that you understand what makes us tick and how we work. So we'll talk about how we work, how we get paid, all of our fee structures, and the fact that we're a registered investment advisory firm, and that we have to put your interest above our own, and that's a legally enforceable thing, and maybe how that might not be the same where you're invested now. But really, it's just kind of getting to know one another. And then from there, we will move on to step 2.
And step 2, I understand, is the analysis. And before we get to that, I want to back up here a little bit on Discovery. People listening to this going, boy, that sounds really good. But, I don't have $1 million, $2 million to come to see Randy. Do you have to have that much money?
No, you do not. We know this. Everybody has tried and saved and done their best. And something else? Sometimes things happen to people along the way. Somebody becomes ill. Somebody, gets disabled, and money of all levels is important to all people, and we want to meet people where they are and help them to stretch that dollar and make it work for them as hard as possible.
So this is for the regular folk just like you and me right here in Springfield that want that financial plan. And again, it doesn't cost you anything to call that number and ask if you qualify, but 99% of the time you are going to qualify. If you're listening to this program, you're a pretty smart cookie, and you need to get in there and talk to Randy. So first step is discovery, finding out what you have. Second is going to be analysis. What's involved with the analysis process, Randy?
So, when we get down to the analysis process, we're going to start saying, okay, so tell me about, do you have a 401k? Do you have an IRA? Do you still keep life insurance? And if you do keep life insurance, is that term or is it whole life? We're just going to learn about the assets that they have and what they've saved. We're going to talk about, your current job situation and what kind of income you have. We're going to learn, do you still have a mortgage on your property? We're going to be looking at all those sorts of things, and just really kind of getting a handle on your financial situation, and then figure out, and this is what people sometimes don't know, what their budget is. A lot of people, as we've raised our families and we've made more money over the years, we just had money in the bank and we didn't have to worry about budgeting like we did when we were young and first married and raising families, right? Mm-hmm. So we will talk about 2 types of budget there, the budget that keeps the wolf away from the door and keeps the power on, and then the other budget is how much do you want for fun money on top of that.
Right.
And so those are the things that we're going to learn. We're going to look at then how people are invested because, depending on our age and where we are in the retirement cycle, in other words, are we 10 years out, 5 years out, or are we at retirement's doorstep, we're going to look and see if they're getting an adequate return for the risk that they're taking, and are they taking too much risk or are they taking too little risk? We'll run an analysis on what they own. We'll take them through a process of assessing how much volatility they can stand inside their portfolio, because the right amount of risk is equal to what that person needs to sustain their lifestyle in retirement. So no more, no less. We want to make sure we do that exactly right, and that's what step 2 is really all about.
So discovery and analysis. Then what is the next step in that 5-step process?
Yeah, the next step is we go to planning, and so during the planning phase, we have learned we've gotten to know people pretty well in Discovery. We've learned about their assets and what they have and what they're kind of looking for in retirement. And at that point in time, Jake and I sit down and go to the drawing board, and we develop a plan for each individual person. And we're really looking at risk tolerance, what they need in income, what they're trying to accomplish as far as their legacy, what they want to leave behind for their kids. We look at all of those things, and then we have another meeting to present that plan and go over the details and talk about why we made the choices we did, how we invest, kind of get underneath the hood, because we think people need to be educated a little bit. We don't want to overdo it, but we want to make sure that people are connected to their money and their investments, and they feel good about it, and they know that, hey, if it gets a little rocky, they're kind of going to know what we're going to do already and how that's going to work so that they can feel good about it and still sleep at night.
So, Randy, those are the first 3 steps there. It's discovery, it's analysis, then you do the plan, you present the plan to the client. If the client likes that, and of course they don't have to go with that, as we've said, there is no obligation. But let's say, Randy, all this looks pretty good to me. What happens next?
Well, next is what we call implementation. And this is one of those things, Jeff, to where normally, we don't sit across the table from somebody, make a presentation and go, all right, Jeff, it's time for you to tell me what you're going to do. Are you going to do this or not? Mm-hmm. That never comes up that way. It's just kind of one of those things that through this process, either we make sense to people or we don't. And I will tell you, the vast majority of the time, what we do is common sense and makes sense to people. And so the implementation process then is basically where we help people do all the paperwork. Sometimes there's a phone call to a past 401k from the company you worked for before you retired or as you're retiring. We handle all the paperwork, make it simple and easy, because we do this every day and most people retire only once. So we're going to make sure we dot all the I's, cross all the T's, and get that money moved over for them.
So those are the first 4 steps, Randy: discovery, analysis, planning, implementation. You said there were 5 steps to this. What's the 5th step?
Yeah, the 5th step, which is equally as important as all of these other ones, is monitoring the program and making sure that we're staying on track and that we are not depleting our assets. One of the things that most people don't want to do is they don't want to see their assets go down, down, down during retirement. So, and we feel the same way. We feel like we should, harvest what we can gain. Once in a while, we're going to have a down market, and we're going to see those balances go down a little bit. But generally speaking, we want over the long haul for people to maintain or grow their assets a little bit. Now, that's not always 100% possible, but for the vast majority of time, I'm telling you, it is.
And Randy, finally, we've said that it doesn't cost anything, so I don't have to write you a check for $1,000. I mean, you're going to do this at no cost at all and no obligation?
That is correct. We're going to go through the whole process with you. The most meetings I ever did for one couple for them to decide was 7. and none of those cost them anything. And finally they said, we just can't think of anything else, so let's just go ahead and do this.
And that's great. So when we say there's no cost and no obligation, truly there is no cost to this and there's no obligation. As you said, you're not going to put the thumb down on people and say, well, when are you going to sign with us? This is an opportunity for you to showcase what you can do for your clients. So again, our loyal listeners to this program, if you're a new listener, I highly, highly encourage you, for your best interest in retirement, is to call 417-889-7233. Get that complimentary plan. Do it while you're thinking about it, sooner than later. 417-889-7233. If you already have a plan from another advisor, always good to get a second opinion. You can also request your plan online at floydfinancialgroup.com. floydfinancialgroup.com. Randy, so much to talk about today, but so little time. I want to thank you for your time because we're out of it for this week. We don't have any more time. For Randy Floyd, I'm Jeff Shade. Thanks for listening. Have a great weekend. We'll talk to you again next weekend with another edition of Show Me the Money.
When it comes to something really important, like your retirement planning, have you ever felt like people are talking at you instead of to you? Things are different at Floyd Financial Group. We understand that there's a person, a story, and a lifetime of hard work that built that nest egg, and we never forget how much is riding on it. At Floyd Financial Group, our professionals can help create a plan that's all about you, not just your portfolio. Call us today at 877-889-PLAN to schedule your free review. That's 877-889-7526.
Do the new administration's proposed tax and estate planning changes have you concerned about your future? The time to prepare is now. So take advantage of a complimentary, no-obligation conversation with Floyd Financial Group. Offered over the phone, virtually, and in person, their entire custom retirement planning process begins with an initial conversation. If the estate exemption is low, lowered and the tax rate is increased, does that leave you with questions? Floyd Financial Group has answers. Will an increase in capital gains tax affect your investments and income distributions? Floyd Financial Group has answers. If changes remain unclear for most of 2021, remember, uncertainty doesn't preclude planning. Get started today by calling Floyd Financial Group at 417-889-7233. It's a complimentary conversation focused solely on you, your questions, your goals, and how changes can impact your family's future. Call 417-889-7233 or visit FloydFinancialGroup.com. Advisory services offered through Floyd Financial Group, LLC.